All right. Good morning, everyone. Let's get into it, and let's say a minute. I'll grab a glass of water while everyone gets in. My fancy schmancy bottle, which is actually tap water, but when it's in the fridge, it looks like wonderful Norwegian artesian water. All right, let's give it a second. Let's let everyone get in. Hello, hello, hello. And today I think we're going to do a bit of a quick call, but I always say that, and then I just, don't stop talking because the topic du jour is always interesting to me. But we'll give it one more minute and then we'll get into it. I hope everyone's weekends were amazing. I hope everyone remembers to get their mother something really, really wonderful this Sunday because she gave you life, carried you for 9 months, told you your farts smelled like roses and your boogers were normal, which they are, but it's the fact that you ate them that wasn't normal. So let's let everyone get in. While everyone gets in, I'm going to give 10 more seconds and I have to look at something. Okay. All right, so let's just get into it, right? So where were we on the market, right? Because we do this only Monday, I kind of, I send out the updates every single day, but I start to think, where did we leave off? So I believe we left off with our victory in Twitter, and we were quite happy about that. We went ahead and sold our position. Ice Baby Still, Robbie, yes. It's not as sexy as a song as it was Thursday. I can tell you my account is cut in half since then, but our expiration is May 20th, and a couple of things that we're going to touch on are going to allow us to feel a little more comfortable. And plus, the most amazing, fantastic indicator ever has presented itself this morning. And I think we know what that indicator is because it is 100% so far accuracy. And I'll tell you what that is in one moment. But if you've been around for a while like Robbie, you probably know what it is. Greetings, Deborah. Okay, so we went ahead and did a bit of a victory lap on Twitter, but actually, as you'll recall, we never really do a victory lap, right? Because it's always on to the next. And we find that those that are successful versus those that are unsuccessful are the ones that you see really go ahead and pat themselves on the back and throw a party when they do something well. Those are usually the unsuccessful people because A, they're so new to success that they don't know how to handle themselves. B, they never thought they'd be successful, so they're celebrating. And C, they completely don't even recognize what they're going to feel like after the next one that doesn't work out or whenever that one happens, which means they've never experienced that type of pain, meaning they'll probably wither out and no longer be around in one or two mistakes, right? So when you see someone really, really congratulate themselves, that's a red flag, run away. It's when you see somebody that actually go ahead and humbly says, okay, we did well, now on to the next, is the one that understands the both sour and sweet of the market and of life for that matter. All right, we got a full room now. As I'm sitting here talking about sweet and sour, which actually is from my favorite movie of all time, which is interesting. It's called Vanilla Sky. It was with Penelope Cruz and Tom Cruise. And I'm not going to go into it, but the sour and sweet was a part of that movie that always stayed with me. Anyway, so then what happened last week? We finally got into ice. Ice, ice, baby. Dun, 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 dun. So it was a 24 red and green. It actually went to a 25 red and green. And we said, you know what, like enough's enough, right? So it went ahead and recovered that day. So it no longer was a 25 red and green. So on a chart, it says 24. But it's been moving in a downward channel. And it looks like it made a bottom, right? Last week, there were 3 consecutive days that it made and held a low. And if you trace that low back to about 6 or 7 months, you'll see that that was a low then. On top of it, the downward trend has been so perfect that that low plus the trend equals, whoop, whoop, whoop. If I had a third arm, I would do it, a triangle. Now, with a triangle, you have a very, very black and white proposition. If you break the bottom of that triangle, you're going to go down and you'll probably go down for a while, right? If you break the top end of that triangle, you're going to go up and probably up for a while. Because especially since that triangle is so neat, right? It's going straight down and the stock has been going down the whole way. Now, once it breaks it, it's clear skies. There's nothing to hold it. There's there's no recent price memory. And of course, you'll say, well, Anthony, it just was that price on its way down. Yeah, for a day. Meaning once it goes past it, there's no, it's been trading here for months. So there's a lot of buyers and sellers. It's just one day worth of buyers and sellers. So it usually blows through it. Meaning if you crack the bottom, look out below. If you crack the top, look out above. So when we go ahead and face that 50-50 proposition, it then takes into account, well, what's your supporting facts, right? So it can only do one of two things, right? Like by definition, because as every day that goes further, the stock goes deeper and deeper into that little acute portion of the triangle, right? So let's see. Boop, 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 boop. Right, so if you imagine a triangle, this is the stock, and even if the stock doesn't go up or down, the next day it's here, the next day it's here, the next day it's here, meaning that at some point it's going to by default be above the downsloping line or below the horizontal support line. So the stock, one way or another, is coming to a point of decision. So in that moment, when you know that decision's coming, what do? Well, you have to kind of calculate the reasons for it to go beneath the line versus the reasons for it to go above the line. So the reasons for it to go beneath the line, as we calculate, are there could be more sellers, which is quite obvious, right? Like that's a consequence of other reasons. But in the context of a market that's just selling off, like Friday was down 1,000 points, it is a real by itself, are there more sellers, right? Because now the sellers are quite emotional. And I say that because when you see a market go down 1,000 in a day and it was down 90% volume 2 days prior, and you see it's really cratering and everything on the news is this is Armageddon, you could start to say to yourself, well, people aren't buying and selling based on logic anymore. They're not saying, oh, well, you know what? Apple did have a good quarter, therefore I'll hold it. What their calculation is, Apple had a good quarter and people are selling it. It's down this much. Amazon was down 15%. The market's down 1,000. I don't know what to do. I'm just going to sell it because obviously people are selling it. Now, more times than not, that's going to be an incorrect behavior. Now, with the caveat that could be correct for a day or two, right? Motion creates emotion, right? So as that behavior's capitulating, more and more people are doing it. Hence, well, you know what? 2 times 2 is 4 because I add 2 plus 2. Yeah, it's right. But how did you get the answer 4? You got it completely incorrectly because 2 plus 2 happens to be 4, which equals the same outcome as 2 times 2. But now do 3 times 3. Well, 6. No, it's 9. But I added 3 plus 3. No, that was always incorrect. The point is you can get to the correct outcome without doing the correct next steps. And emotionally just throwing stock out a window because other people are doing it can be correct for a day or two, but it ultimately is going to leave you very incorrect because I think a lot of people have felt this once or twice where they finally sold the stock and then the stock rallies and they're like, oh, my luck is so bad. The market rigged against me. First of all, you're not large enough for the market to be rigged against you. In fact, no one in the market even knows who you are. Therefore, for you to sell something, it's not like the market says, hey guys, Timothy sold, so everyone can now buy it. It means that you were completely a hostage to your emotion, which happened to be equivalent or the same as others like you. And when you decide to finally just throw the stock out, and actually you're a really good arbiter of it, right? Because, and again, I'm speaking very broadly, but this is accurate for the majority of our audience because I don't think any of us are billionaires. Maybe some of you are, right? And we do know there are those that watch this, but not live, most. Anyway, so the majority of you are not billionaires, meaning when you own a stock, you're looking for it to go up, meaning when it goes down, you have a tolerance. All right, I don't have billions of dollars. I'm not just going to buy and sell because I can't play that game. I'm not good at it. I can never buy and sell as quick as the market can. Okay, so I'm just going to hold it. And the stock goes down. I'm just going to hold it. and the stock goes down. Now you get a little nervous. You talk to your neighbor, you talk to your Uber driver, you talk to your grocer, you talk to your checkout attendant, and you're like, yeah, we bought that stock and it's not doing so well. Yeah, we're going to hold it too. Okay. So now you hold it. It goes down a little bit more. Yeah, well, that's actually true, right? So future billionaires are cool. But then what happens? The stock goes down a little bit. Then the stock has 1,000-point day, right? The market is 1,000-point day. And you're looking at it because 1,000 points is kind of like an event. It's something that brings people to the show, right? It's the bearded woman at the circus. And now everyone's watching, and they're white knuckling, right? Like they're holding on to something, they're clawing something. And what you could see on Friday, the last hour, the market went down from like 650 to down 1,000. It was already down 600. So what in that last hour changed? Well, probably people's emotions. Oh my God, we're going into a weekend. This really is so ugly. I think the market's gonna go down, and it becomes almost like a self-fulfilling prophecy. I think the market's gonna go down 1,000, so let me sell. Oh, good thing I sold because the market went down 1,000, right? Like there is a chicken or the egg conversation to be had there, right? So you sell. And then you look at your friend and you say, I had to. The market was down 900. What was I going to do? And your friend's like, well, I didn't sell. And you're like, now, of course, it's confirmation bias. You're telling them that you made the right decision, right? Well, I understand, but you got to sell. And now you start explaining all of your reasons why you sold, but your reasons were emotional. So now you've had a weekend of logic to pertain to it. So because the whole weekend was spent with financial news media and all the rest saying, yeah, you had to sell, inflation, the Fed, blah, 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 blah. So you now parrot that to your friend. And he says, okay, you're right. The second Monday opens, I don't care where it is, I'm selling. And it's that sentence that's usually the key to a bottom. Monday, I don't care where it opens, I'm going to sell. Now you might say, well, Anthony, that's like a grocer talking to an Uber driver. Like, how can that be worth anything? Well, people are different, but they're the same, right? Like people are different, but they rhyme. So this Indian lady, plus this Asian man, plus this Black child, plus this Italian grandmother, plus, when you add them all up, yeah, they might eat different foods, they might talk to each other differently, but they have the same instinctual behavior, right? Like their cultures make them beautifully different, but do they all eat? Do they all sleep? Do they all love? Do they all have anger, right? Like the instincts are the same, meaning that churn that they feel in their stomach is all the same, which means if that sentence is said by one person, you could be sure that that sentence is being said by many people, and that one person is a sample size of it. That one person is the door to go ahead and let you know that sentence is being said. Now, whether it's being said by everyone is a different story. But if it's said once, how long does it take to infect others? It's like a virus. When that sentence is said, now that person sells, that person then explains their selling to someone that didn't sell. Most people already did sell because it was down 1,000, but anyone that didn't sell, they say, I don't know what to tell you. Like, I was just like you. I didn't sell either. And then I realized this is just painful. No matter what the price is, I got to get out. Because maybe Monday being today was another down day. Now that person that sold at any price looks correct. 2 times 2 is 4 to him because he added 2 plus 2. So now he goes ahead and beats his chest to the next person. The person that sold Friday beats their chest to the next person. And that infection then takes everyone. Because that infection also has the benefit of being correct. And it has the benefit of being correct during a time that people are emotionally unstable and they're looking for a solution. Although that behavior was always calculated wrongly, which is why those people will never make money because they always look for the immediate gratification. Now, I know I'm talking a lot of behavior. My background is behavioral science, but the reason I love the market is because it's behavioral science played at the highest level where people are using their money. And there is a time duration. If you don't make a move now, then tomorrow, then the next day, then the next second, then the next minute, that decision is gone. You no longer have it, right? Like I could have sold Friday when the stock was up at 119.5 at a price that's over 2 times what my account's worth right now. Am I a logical person? Yeah. Do I wish I sold then? Yes. But does that mean that I now... Does the equation equal, I wish I sold Friday morning, therefore I must sell now? Does that equal? Well, if the stock is down today, it does equal, but did I get to the outcome by using the correct analysis. No, I got lucky. So do I want to go ahead and sell something that I believe is the infection, the virus is spreading where all those that are the last people to sell are selling? Well, no, I don't. Now, Anthony, how can you tell how long that's going to last? Like hands, right? Like I'm human. But I can put the odds in my favor. We know that it was a 24 red and green. And for those that don't understand what that means 24 straight days the stock closed lower than where it closed the previous 4 days. Now, that's the simplified explanation. There's a lot of other stuff that go with that. But if you can understand that concept, you understand 95% of it, which means 24, meaning the first one was a result of what happened prior 4 days ago, which means 24 plus those 4 prior days is 28 straight market days, and there's only 23 in a month. So for over a month in real time, the stock has gone down every single day consecutive to the previous 4 days. Well, Ant, didn't you say it got to a 25 before it turned that day? Yeah, so 29 straight market days, which is about a month and a half in real time. So do I believe that those that wanted to sell are probably out? Yes. Now, could the stock go to 50? Could it get chopped in half? Yes, I could lose all my money, right? Like, let's put that out there. And unless you understand that, then you do not belong in the market. You can lose all your money today. They could come out and find out the CEO has been diddling little boys, and the whole company could go to zero, right? That's a real thing. Maybe those people know. Maybe they know something I don't, right? But short of some big scam or fraud, which I'm never going to assume, it's like when you play roulette and you get a zero. It's like you're playing red or black, but there's that one green dart. It's the what's it called? It's the price of admission, because you're playing roulette, you're playing black and red, and then the green comes out and you're like, all right, whatever, let's continue, right? So if the green comes out and the CEO is diddling little boys, then I'm going to be a lot of egg on my face. But that doesn't mean I'm going to change anything I did, because I cannot assume that. You cannot assume that every company is fraudulent, and if you do, you're just not in the market, right? So put that aside. If you're in the market, you're operating on the assumption that everyone's not fraud. So the proof is in the pudding. By definition, we're here. Let's move on. With that being said, do I believe that the selling has been exhausted? Yeah, I see the red. I see the coiled spring. I see the green. I see the money still coming in. Now, what does ICE actually do, right? Intercontinental Exchange. Now, when I was in the market when I was younger, like 2008, 2009, ICE was just solely a commodity exchange, right? So when commodity prices went up, ICE usually went up with it, because commodity prices going up mean more people are buying and selling it, which means more transaction fees, more the flywheel of everything that does, brings people into their ecosystem. Hence, you want to own ICE. Like when oil went to 150, when I was in the market in 07, I think, ICE was the way to play it. Look at oil running. People are buying oil futures. You buy that at ICE. Okay. Because they were so successful, they started buying other exchanges. Do you know the New York Stock Exchange? Yes, the actual building, the actual exchange. Like, we're not talking about New York Stock Exchange as in speaking facetiously. We're talking about the actual exchange ICE owns. That is part of ICE. So if people are buying and selling stock, that goes to ICE. New York Stock Exchange, before ICE bought them, bought Euronet, the New York Stock Exchange of Europe, meaning ICE is the greatest beneficiary of all the trading going on in America, and all the trading going on in Europe, and all the trading going on commodities. Okay, cool. They have fixed income products. They have a lot of recurring services that have been growing every single quarter. So let's talk about that a little bit, right? And we'll try to keep this to 2 or 3 minutes. Because I know when I say that, it's like, oh, we might go for a half hour. No, this is just to the point. New York Stock Exchange, when stocks go up, people buy it, right? So a lot of people get excited. When stocks go down, people sell it. A lot of people sell. It's after they go down that people don't usually come back to the market, because they go, I lost all my money. So the trading activity lowers when the market crashes or goes down. But the trading activity is very violent and it's very abundant while it's happening. So can we say over the last quarter, the market has been like really, really crazy? There's a lot of trading activity? Yeah, so I think that will be good. Do we believe that to be the same for Europe? Well, you've had a war in Europe, meaning all the things that have been going on over there have allowed a market to be up and down. Like nobody knows what's going on. Okay, let me get my stocks out. Commodities. Do I even need to ask a question? Do you believe that commodities have had quite a popular quarter? Oil ran to 130 from 60. That is their biggest business, oil futures. Do we believe that their oil numbers are going to be quite strong, which is the largest component of their business, about 35% of their revenue? Yeah, I think so. Do we believe all the other commodities have been bought and sold? Anyone know what corn was? It went to 9. It was down to 4. Lumber, soybeans, blah, right? Like, so do we believe fundamentally that they had a good quarter? In fact, you could even say a record quarter, because when you add all that stuff up into aggregate, you could say that that is going to produce a record quarter. Yes. Okay, what about their competitors? Chicago Mercantile Exchange, a CME, a Chicago Board of Options, a CBOE, the NASDAQ Stock Exchange, NDAQ. Well, they all reported. So we have the benefit of knowing what they already reported, right? They're other exchanges, so we can get a look, a read through to what we should expect. Chicago Board of Options, which actually trades the most closely to ICE, had a record quarter, and they raised guidance for the rest of the year. But the stock started up 3 points Friday, but then, got succumbed to the market. Chicago Mercantile Exchange. In fact, when ICE was a 25 red and green, the reason it reversed that day was because the Chicago Mercantile Exchange reported that morning, and they showed record numbers. The NASDAQ Stock Exchange reported, I believe, at the end of, or like 2 or 3 weeks ago. I don't remember if they had a record number, but they had a very good number, right? And then the NASDAQ comes down. Everything's been, the NASDAQ's been crashing in itself, and this is the NASDAQ Exchange. Therefore, one could do the math. All right, well, if the NASDAQ Stock Exchange is crashing, those people that are in those stocks are probably not going to come back anytime soon. So they took it the worst, right? ICE is to commodities as NASDAQ Stock Exchange is to assets. Where would you rather be? In fact, do you know the only asset that's up this entire year is commodities? So you have the exchange that actually trades all that, that's being valued as every other exchange is being valued as a regular stock that's been getting annihilated, and the selling that we believe is exhausted. So remember that triangle? What over here could be the thing that sends it up? Because we just share all the things that could send it down. Bad numbers, bad this, bad that, which we don't actually believe, but we have to go ahead and share that. Not that we have to, right? Like that was really wrong phrasing. We are obligated to ourselves to know the pros and cons. In fact, to make any good decision, you must go ahead and make counterpoints and then go ahead and resolve them for you to decide if you're being, like if you have blinders on, right? Like, oh, that girl's really pretty. I like her a lot. She has this, this, this. I'm going to marry her. Well, did you even take a second to realize that she kicks puppies and has 7 kids by 7 different fathers? Or did you only look at that she has, a good body figure, right? You have to know the pros and cons and go ahead and reconcile them, because regardless of how good she looks, age will go ahead and Father Time is undefeated. That view, that aesthetic view is going to deteriorate over life, while those 7 kids are going to get older and ask you for allowance, right? So good and bad. The analogies I make are like really out of control. So what's on the good side? Well, I think we kind of shared what's on the good side by pointing out what's on the bad side. But what we did not share, that triangle, this date, the point of decision just happens to be on earnings. So Thursday, they report earnings. So everything we just shared about the quarter actually is going to come out to the public domain. So if we're correct, which we believe we're correct, because it seems silly to operate under the opposite assumption, which we could be wrong, right? But if we're correct and the stock reacts favorably, good earnings, stock should go up unless the whole market goes down 1,000, you will see it break that top line. And if it breaks that top line on good earnings, and God forbid the market actually recovers a little bit, well, you have blue skies from here to kingdom come. You could see a stock that's 125, 130, 135 in the relatively near term. Maybe even by the end of the week, you get 125, which is kind of quietly what I'm expecting, right? So what other things can happen during the week? Well, today is the first trading day of April. You had May, you had a really, really bad April. Now, how are portfolios calculated, right? So they're done in quarters. January, February, March is one quarter, April, May, June. So presumably everyone that was in April is having a bad quarter, right? Now you go into May. All right. Is there an argument that can be made that everyone says, okay, we're not going to continue selling here. It's a new month. Everyone's looking at the months new. We just got the gift of down 1,000 over there. Let's go ahead and redeploy the money and play for a rebound. And if we're all collectively thinking that, then maybe it happens. So wait a second. You have a scenario where the investment managers and the large index funds are looking to purchase the market because it's the first trading day, and they believe that they can maybe go ahead and engineer a rebound for this month, since last month was down 13% for the S&P, down like 17% for the NASDAQ, or was it 8% for the S&P and 13% for the NASDAQ? The point is, it was the worst month for the NASDAQ since October 2008, and I can promise you that was not a good month, right? Like that was financial crisis status. But the NASDAQ bottomed in February 2009. So if you go ahead and draw the parallel, you could say that you'll have a choppy next 3 months, but then you're up for the next 17 years in a row, right? So you're closer to the end than the beginning of something bad. For those that say, oh my God, this is so bad, the market's going to crash, where have they been? It has crashed. It's down a lot. Well, and it's going to be down more. Well, it's easy to say that, but how do you measure that, right? Like, do you just surround yourself with people that agree with you? Because money flow is how markets go up or down, buys and sells. So we don't need to do the analysis again because we've shared it many, many times, but it bears a little bit of repeating, like a little bit of a summary. If you were in any other country, would you trust putting your money in your own country or sending it to the US? If you were in Europe with Russia going ahead and waging war right on your border, would you feel like I should be in Europe or I should send money to the US? In fact, if you have the European currency, the euro, I believe it's down to 105. Remember when that was like 150? Meaning you have lost so much purchasing power to the US dollar. Now, why is the US dollar going up so much? Oh, well, they're raising rates. Well, they haven't raised rates yet. They did it once. So why is it up so much? Because the money flows coming to the US. Every other country saying, just get me out of my currency, get me out of everything here. Let me send it to the US, because the US, you can't just drop a tank in Virginia. Like we have the Atlantic and the Pacific Ocean. Our two border neighbors, Mexico and Canada, aren't exactly going to wage war on us, right? To put it lightly. Our market is guaranteed. The dollar is making new highs, like I think 20-year highs, and continuing to go. And we have a president that's a complete, whatever, but he cannot unilaterally do anything. And that's not a commentary on his mental faculties, which we'll save for a later date. But the United States is United States of America. There's 50 of them. They each have their own governors, their senators, their congressmen, their House representatives. Every single state acts in a certain check and balance that if the president does something cuckoo for Cocoa Puffs, other states are like, well, we're not even going to deal with that right now, so we'll do what we're doing, which means this country is protected from any one person seriously blowing it up. Okay, and we're also raising rates, which means we're supporting the value of the currency. So all of these things would say, okay, yeah, the US might not be like really cool if you watch CNN or something, but in terms of a macroeconomic look, it's the tallest midget. It's the best place to be. So let's send our money over there. So as money gets sent over, where does it go? Well, it starts in money markets, which is why you see the currency up. But does it go to bonds? Well, bonds are down on the year. Does it go to stocks? Stocks are down on the year. So where's the money? It's probably just sitting in the money markets. But do you think anyone wants to leave money in money markets forever? No, they go ahead and start moving it into opportunities. Okay, well, the stock market came down this much, add a little bit more, add a little bit more, add a little bit more, which is why you've seen every single week, regardless of the stock market going down, there's been net inflows because money's coming into the market. So when the market stops going down and actually starts moving up, those net inflows are going to send it through the roof. Now, we're very close to our March lows, I believe they were. I think it's like around 4,100 on the S&P. I don't know where it is now. We're going to look at it and I'll probably jump up or down or cry. I am so down. I do not want to leave because I cannot play this game, but I'm worried. So Frida, I do understand that. We could talk later or get on a call together and I could help put myself in your shoes. Of course, I don't know what you want. I don't know any of that because I don't know anything of anyone, but we could talk as friends. I can't give advice, but I could certainly take an interest. So let's set that up a little bit later. Long story short, the Fed meets Wednesday as well. We all know what they're going to do. And it's kind of like, what's scarier? Oh my God, they're going to do it. They're going to do it, or that they did it, right? Like you did something bad and your parents know about it. And they're like, you know what? We're going to talk about this next week. That whole next week, you like want to rip your hair out. Oh my God, I don't know what they're going to do. I know they're going to do this, but just get it over. And then they sit down with you and they go, you're grounded for 2 weeks. And you're like, oh, thank you. At least that's over. That's what Wednesday is going to be like. All the talking about what the Fed's going to do is more detrimental, more dangerous to stock prices than them actually doing. So for the most part, Wednesday kind of sets up to a relief rally. Okay, that's out the way. Let's go. Then Thursday morning we have earnings, so we might have earnings be really good just at the moment that the market actually starts rebounding. So we believe today, well, we'll take a look, but I believe it will start higher, go down, and maybe end up around break even. That's kind of the best case scenario. Then tomorrow we want it to like start higher again, go down, end up plus 100, 200. Then Wednesday we want it to kind of flutter around, and then the Fed meeting comes out, and then it blasts higher. That would be a perfect situation. What does that mean to ICE during that time period? Well, it means it's probably going to be down today and maybe down tomorrow. And then Wednesday should be the time that starts moving up. Now, Ann, aren't you a little nervous? Yeah, of course I am. I just look cool. Like I'm totally nervous about it. I'm very anxious about it. But my game plan is this week to go ahead and show me it. If things go really bad this week, I'm out, right? Like that's end of story. I'll take my losses. We've seen it. I take my losses all the time. But I believe this is the week that we really go ahead and build that. And in terms of building it, I want to be there to build it, because to see it being built while I sold because I was scared is not good. So I am totally scared to look at where the market is right now. So we'll see it together. We'll go through our news. Well, let's just see what's going on. I don't think it's going to be much longer of a call after this, though. Okay. So let's go ahead and minimize this. Let's raise this. Okay. All right. So the market's up 240. So well, let's just take a look at what the market did today. So it started up, went down, and now it's pushing much higher. That's a good thing, right? It came down. So look at all, and again, let's just go ahead and play out what we spoke of, right? I don't care what the price is Monday, I'm selling no matter what. Now, although I don't know why this happened, can one say, well, Ant, maybe it happened because people sold, maybe not, but that certainly fits the pattern of events, right? That explanation fits what happened. Now they sold, okay, well, other people bought. All right, well, let me get out. Now it's pushing highs. So that's pretty cool, right? Okay. The S&P's up, the Nasdaq's making a nice recovery. The VIX is up. Now that's unnerving because the VIX is your volatility index. When stocks are up, you should be less volatile. You should become more complacent. All right, stocks going up, I feel good. This means people are nervous because stocks are going up. They're looking for something really bad to happen. Does something really bad happen? I don't know. Maybe they're just nervous something bad's going to happen, which means this could also be an opportunity. All right, look, the market's going up and people are still scared. Well, how much further does the market go up before the people that are scared realize there was something to be scared of and they start jumping in, right? Could this be the next leg higher? I don't know. So that's that. Let's take a look at this page. Oh, by the way, Berkshire Hathaway was a net buyer of 51 billion worth of stock. That is the most net buying of stock they did in any quarter since 2008, which was the low. Well, 2009, the first month or two was the low of the market. But to see Warren Buffett say, okay, look at this opportunity I'm getting in, was at least the green light to start taking advantage of particular opportunities, right? Moderna's up 8%. That's never good because they're COVID kind of related. And then Zoom is up a lot. Facebook's up. These are relief rallies. So let's see. what's going on here? So ICE got down to 114.5, got as high as 116.5. It's now sitting in the middle, down 20 cents. It's not the end of the world. All right, Twitter's up, State Street's up. So State Street was a 22, actually was a 21 red and green. And we really, really wish we bought it here, but we had our position in ICE, so we didn't, and now it's up 2.5% on the day. Now we added a new indicator, if you've noticed. And what this does, it measures the MACD lines, which is called the MACD, which is two different exponential moving averages, one for large institutional flow and one for retail flow. When it crosses up, it's the institutional flow taking over, which makes the stock move higher. And that's a really, really generalized explanation, but it is one that has served me well. So I did want to add it. It's almost like one of those things like, oh my God, we're adding new indicators. We're really looking for something, right? We're just trying to be more comprehensive. So when you see it turn green, well, that's a good time to buy. When you see it turn green, that's a good time to buy. All right. So FXF, which is 19 red and green, that is something we spoke of last week. It is the Swiss franc. I think we spoke of it like 15 or 16. And again, we only buy on 20s. So it's getting very, very close. And then you'll see we have a lot of things up. Also, what you'll see is crypto just getting beat up. But there's a lot of cryptos. These are all 10 to 16 red and green. So crypto is starting to get to a point of being quite interesting. So let's just take a look at Don levels. Let's go through this really quickly, and then I'm going to run because today is a day that's very a lot. All right, so the Swiss franc versus the US dollar is 20 red and green. Now the FXF is an ETF to play it. So if you're looking for, and obviously there's a difference, right? Because there's fees associated with it, just the word. Deborah, yeah, go ahead. I don't know what you wrote before that. I will look at it. But if you were just trading straight currencies, Swiss franc would be the one you'd like to do. Silver is now at 10 red and green. So that's starting to look interesting. We put it on the list. I gotta tell you, if you're so scared, not you, but if everyone's scared of inflation, I see a lot of things coming down. Right? They've all, I mean, they're up, but doesn't look like they're going to make new highs anytime soon. Oats, 12 red and green. That looks interesting. Oil's down 2. Gold is now at 10 red, no green yet. Copper, yikes, that is ugly. S&P is almost close to highs of the day. NASDAQ, same thing. All right, so that's the charting for today. Obviously, tomorrow we'll go ahead and send a list of all the red and greens. Actually, you know what we'll do? Hold on, what did I just do? Hold on 1 second. I know I just shut off the screen share, so just bear with me for a second. Take a screenshot of our super dupers. Bear with me for one moment. La, 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 la. Where is it? Maybe this is it. All right. We're going into RHINOWealth and posting a picture of our super duper list for the day. Anyone ever know that I misspell a lot? It's because I type really quickly, which actually isn't a good excuse, because if you're misspelling, you're typing too quickly, right? Like you shouldn't be typing that quickly. All right, so where is my stuff? Hold on 1 second. Where is all this? Did I lose it? Well, hold on, I think I lost my What page? Wait, I clearly don't know where everything just, oh, there it is. Sorry about that. I lost the screen for a second. Okay. Frida, J courts your encouragement when you falter. Okay, just, oh, okay, that was to, all right, cool. Well, we're gonna get going now. Obviously starting Tuesday, Wednesday, Thursday, Friday, we send the super duper list with all the numbers on it. We're gonna go ahead and upload this into RHINOWealth now. And I hope to see everyone Wednesday on our Rhino World. A lot of things are going on with Rhino Street and good things, right? So love everyone. Let's have a good market. Ice, ice, baby. Dun, 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 dun. All right. Bye, everyone.